Hey everybody, this is John. Welcome to the free video. And let's take a quick look at the markets on the spiders. A little more of the same. Of course, everybody's kind of hurry up and wait mode. Are they going to raise interest rates and all that kind of fun stuff? And the main thing with the markets here, from a daily perspective, does it look bad? Yes. You got kind of that head and shoulders top. We are still above a 21 period moving average. If we look at the weekly chart, here's the thing. Look, is this in an uptrend? Yes. But is it extended? Yes. This is the 21 period moving average. That's the mean. Price always reverts back to the mean. We're pretty far away from it. And if you look at this weekly squeeze here, you can see that the momentum has just run out. If if you're familiar with the RAF signal, then we've also got some sell signals there. So all in all, it's I would say, if you're flat the market and you're going, you know what? I want to go all into the long side. It's not the best entry, but it continues to be the path of least resistance. And so what do we do in this situation? And what I do in this situation is just I find more special situations. Like, I'm not interested in the market if it's vacillating. Why risk your hard-earned money in a situation like that? And so in terms of a special situation, the alert that we got at today was on Tesla. Okay. Now Tesla, look, I didn't get this alert until this happened. And when this happened, we were in the trading room, we did the trade, we texted it out, all that kind of fun stuff. So this is the one that went out at 11:09 a.m. Just to buy some of the $245 calls. And also did one, I think it was on Momo. Let me check here. No, that was a vertical on Oracle. Let me see what the other alert was. Yeah, on this one, it's kind of like the Facebook of China. And this was one, and you'll notice this one was, while the Tesla trade was more short term, this is actually the April monthly calls. So looking for kind of a bigger move there. So on Tesla, we took some profits today and then let some run overnight to see if we can get a gap up tomorrow. And a big part of the reason I wanted to hold on to it is because we did break through. We had multiple weekly resistance here and also back over here. So that was actually a pretty good clearing, and it opens up the door for more short covering. And I'm not saying I like, hey, Tesla's a steal here. I'm just saying the demand for shares far out exceeds supply at this moment in time, and we want to take advantage of it. And then, of course, Momo has got some momentum, and it's just, the correlations and all that kind of stuff, it's off the chart. So I do like that. So in this kind of a market, instead of messing around with the stock market, which is, it's kind of hanging in limbo, there are plenty of individual opportunities out there to take advantage of that are kind of independent of the market, which is what I like. So one thing that's been popping up, and people always ask, and it's like, all right, so this kind of market, it's been different. How are you doing this year compared to last year? And this year it's actually been, it's been accelerating faster than last year. As of, the time that this copy was written, my account was up 98%. It's actually up higher than that after today. We had some good moves in Tesla and Momo. But what I found with this, and I'll show you something real quick, it's a cool little tool, is that while there's a couple of different ways to kind of accentuate a setup, but really it's like once you find the setup, it's what is the best option strategy for that stock, okay? Not the setup for that stock, okay? That's a little different, right? So let me show you an example. So check this out. So if I get a bullish signal on Priceline, okay, I could buy Delta 90 calls, buy Delta 60 calls, Delta 50 calls, Delta 40 calls, Delta 25 calls, and you can see that over time, none of those work, okay? The 25 calls, the money calls, lose the most amount. That's not a surprise. And then the 60s and the 90s, a little bit different there. So that's, okay, it's like, all right, so if I've got a bullish setup in Priceline, I shouldn't even buy calls. Whereas with some stocks like Tesla, actually buying calls does make sense. Now, with Priceline, going back and looking at those same setups with a different strategy, all right, you can see that instead of losing, whatever it was, you're making 139%. Okay, so on a one lot, this is based on one contract. 107% doing it this way, 107% doing it this way, 93% this way, yada yada yada. So anyway, I thought that was fascinating because what I did is just like, all right, on this stock, if I've got bullish setups, and I buy a call, it's like I could I could lose money even though the setup was right, okay? But then if I did this strategy, it would actually work perfect, as you can see. So anyway, that's the deal. I'm going to do this webinar. I'll show you guys my statements and all that kind of stuff too. And you go to simplertrading.com/rapid. It's a free webinar. It's going to be coming up next Tuesday, March 21st at 7 o'clock Central, and just going to cover some kind of cool stuff that it just, again, hey, here's a good setup. What's the best strategy for this particular stock? Okay, and for some, buying a call's fine, like a Tesla. Some, like Priceline, you could have a great setup and you still lose money on it because you're doing the wrong strategy for that stock. Okay, so isn't that crazy? Anyway, it'll be fun. That's it. So you guys have fun, and we'll see you on the webinar on Tuesday.